Good day, folks. Thank God it's Friday. Welcome to Friday. It's a big day today. NFP, non-farm payrolls day today. We'll talk about that shortly. In the meantime, I'm running a special offer. I just want you to be aware of it. And if you go to my site, ArcisTrading.com, I'll put the link up on the screen right now, and click on that site. You'll get a 30% discount offer popping up on your screen. Just put in your email address there and you can get 30% off anything, including my private trading group and the Swing Trading Blueprint course. There's more information on the site about that. Right, enough about that. Let's go on to the charts and see what's going on. As I said, it's NFP Friday. Now, NFP, non-farm payrolls, is the biggest job number. It's the first Friday of every month, and it normally has a massive effect on the markets. I'll give you a specific tip on how to trade the NFP in a short while when we get to that point. But in the meantime, let's quickly scan through the charts and see where we are. As you know, we're long on the euro, the pound, and we've been short the dollar yen this whole time. I've just taken a small hedge position on the dollar yen just to counteract the bounce that we're probably going to get here. We're bouncing off that Fibonacci level. That's the 38% retracement and the market structure break order block area, which I pointed out in the last video I did. So I expect we may try and get a bounce back to the trend line or to these moving averages. And that would take us to 152.80 and maybe to the underside of this ledge over here at around 154. I'm going to just show you this on the 4-hour chart so you can see that ledge more clearly. So remembering that we've now taken some long trades, but we've kept the short trades open. So we've hedged it basically. Not fully hedged, but somewhat partially hedged. There's the ledge I'm talking about. I'll draw a line across there. Okay, so it's that level there. You can see we're just below 154 at 153.80-ish. We might push up a little higher. Notice on the 4-hour chart, all the moving averages are also up in that sort of region as they are on the day chart. Over the next couple of days and over the weekend, this 20-period moving average, the green one, will move down and meet up with this horizontal line at some point. Probably cross over the 50, giving us a short cross, but we don't pay too much attention to moving average crossovers. So somewhere in that apex between the trend line and the horizontal line, we'll get out of those long positions, the hedge positions, and probably add that to the short side. Nothing much to add on the euro or the pound. These are the day charts. You can see yesterday, the last 2 days, in fact, very, very quiet. Nothing much going on. A little bit of a dip on the pound and a bounce back up just to the 20-period moving average and this trend line breakout. It's super interesting, these trend line breakouts and retracements that we've often seen. We've seen it on actually coffee recently. I'll show you that chart as well shortly. This is a very typical and very reliable pattern, and you can apply it to most instruments that you trade. So we have a trend line, a breakout through the top of the trend line, a retracement back down to the trend line and the 20-period moving average, a classic place for a bounce. I'll show you this on the cocoa chart later on. Right, now we've got nothing else. The DXY, also similar sort of pattern really, just bouncing along here, and any break below this level, and we've got a tiny little underside trend line there, and a breakdown below should see quite a quick rush down to about 105 on the dollar index. We're currently trading at 107.75, so lots of room to go down. We talked about the breakout pullback on the trend line. I forgot about this one as well on the dollar index. This is so interesting. There's the same trend line, similar to what we saw on the pound or the euro, but here it's much more clear. There's the trend line, the breakdown, and then the pullback to precisely that trend line and the top 200-period Bollinger Band just piercing through it. Bollinger Band pierces are always interesting for potential reversals, but particularly when we have such a beautiful technical pattern like that. And of course, we've moved down from there. So that's a big rejection from the trend line on the dollar index, and I expect this move to at some stage continue lower. So looking at stocks, without zooming in too much, we've got a big call wall on either side of the NASDAQ and the S&P. I pointed this out on X yesterday and to my private group. We're just trying to edge out of there now on the S&P. This blob that I've got drawn on the chart is this sort of rough area of the call wall at the top here and below us, and we're trapped right there like we are in many markets. You can see the same sort of thing on the NASDAQ. I've got no positions on the S&P, but we have 2 short positions on the NASDAQ. Now, there is a sense that this market is now oversubscribed to the upside, particularly in the retail sector, retail traders. I think the retail trading sector is the most bullish it's been since 2021, which is always a warning sign for the longs. It's a little overcrowded. You can see we've got this little triangle. Until we break out of that triangle, we don't know which way this is going to go. We've got all sorts of technical targets here. We've got this long-term channel, short-term channel. I've got blobs still drawn at the top and the bottom where we could get to on a move down. I do expect that these markets will correct by 10% or so in the coming weeks and maybe months, but maybe it's sooner rather than later. It's very, very difficult to tell. We don't have any positions on the German 30. I was asked yesterday if we should sell at that double top. We didn't, because I think the most pain would be caused by this market moving higher as it has done. Even though we gapped down, rushed up, closed the gap, we've just then carried on moving higher. As the euro weakens, and it has been a little bit weak over the last couple of days, this will tend to push the DAX up. So that's what's happening right there. Now, we're also long on Tesla. Nice bounce yesterday. We took another tranche right at the bottom yesterday. And whether this will hold, I know there's a lot of negative sentiment about Tesla, but I think we may have a false break. I wouldn't be surprised if we gapped up today. And if we can get above this triangle trend line top, it'll bode very well to Tesla. Notice also that the 20 and the 50 period moving averages are right there. So let's see how we go today. And with the non-farm payrolls jobs report coming out, it's going to affect all the markets, predominantly the currency markets, but we'll also see moves on the stock market. The non-farm payrolls number is expected to be lower. The NFP number is projected to be 170,000 jobs compared to 256 on the last report. Anything above about 150 to 200 is considered to be a good report. So the 170 region is not great. And particularly if we see a drop below the previous month, which was quite good, it'll be quite significant. What I do think, though, is that if we do see a weaker jobs number, it's not necessarily bad for the markets. What it will do is it will put pressure on the interest rates and calls to reduce interest rates if the jobs numbers are coming off. A reduction in interest rates means probably more liquidity into the market and a rally in things like stocks and crypto and maybe even gold and silver and that sort of thing. But if the jobs number comes out unexpectedly high, we could see a sell-off in the market. So it's a sort of good news is bad news type of scenario. Keep that in mind. Now, I want to give you one tip about trading the NFP, and remember it primarily affects currencies. So here's the tip. This is Friday the 6th of September when the jobs report came out. You can see that's the right time. It's 8:30 a.m. in Eastern Time, New York. And this is typically what you see happen. You can see the first move of the market. This is a 15-minute chart. Let me zoom in for you very quickly. The first move of the market, in fact, several, it's very difficult to have a look at this unless we go to the 5-minute chart. So you can see there's a massive spike up, a massive spike down, return to back where we started actually, and then a massive stair step down, a bit more thrashing around. All of that takes about half an hour to an hour. The best tip about NFP is to wait for that first hour to pass before you take any trades. Unless you're a very, very short-term trader trading these whipsaws, trading off 1-minute charts or something like that, fair enough. It's not something that I do. But if you're a swing trader or sort of a more medium-term trader, then you'll want to be waiting for this to settle down. Remember, the NFP report comes out at the bottom of the hour. That's 8:30 a.m. Eastern Time. So the first point we've got to get to is the top of the hour. That's when most important trades, most important directions and decisions are made at the top of every hour. Ask any institutional trader. So the first point we've got to get to is the top of the hour, and then an hour later to add an hour onto the NFP time. So that takes us to the bottom of the next hour, 9:30 a.m. Eastern Time. After the market settles down, it begins to move in the actual direction that the market wanted to move in. And very often we just view this as noise and basically completely ignore it. The market will settle down one way or the other, in this case downwards. Right, let's go back to the day chart. You can see today we've had almost no movement on the euro. So just waiting for the NFP. Often the market will be very, very quiet beforehand. So rule of thumb, wait for the first half an hour to approach. If it's still pretty unclear and very choppy, wait for the next half an hour. In other words, 1 hour since the result. And then you'll be able to get into a much better and safer trade position. There are actually NFP trades that we take, or I used to take many years ago, where we actually trade that whipsaw straight after the news announcement, but it's not something I do very much of anymore. Right, I think we got distracted by that. Let's go back to stocks where we are. So just to summarize, we're short on the NASDAQ. There's our 2 tranches. Nothing on any of the other indices. We're long on Tesla, as I said. We're also long on Coinbase, and we're long on Apple. Apple's doing okay. Coinbase looking a little weak, but as someone in my private group once said, the people that make the most money in gold rushes are those selling spades and wheelbarrows and lorries and that sort of thing. So the utilities around the gold rush, that's kind of what Coinbase is like. So I'm overall just generally bullish on Coinbase, as I am with Bitcoin. Now let's go across to cryptos and metals. Nothing really. Very quiet week, apart from that big spike down on Monday, just taking out that low there, but not getting below the previous low. And we remain long on Bitcoin. It has not changed. We may see some activity in this after the NFP result comes out. If we have a very weird number, extremely high or extremely low, that will no doubt affect Bitcoin as well. We're also long on Ethereum, kind of like Ethereum, a lot of money flowing to there at the moment. It's becoming a popular trade, I think. That big spike low on Ethereum makes it look very attractive, as it does on XRP actually. But that big spike low, which cleaned up a lot of traders, gave us another opportunity to buy a bit more. We could have bought lower, but anyway, We bought near the bottom of the trend line, just on that trend line break or channel line, and near that support block over there. So I kind of like Ethereum, and I also like Ripple XRP, that one having dropped about almost 40% on that big spike down. But we also bought some more at that support level, even though it went a little bit low. We could have got much more lower down. Nevertheless, that's where we are. We're out of our gold and silver trades for now, perhaps prematurely, but remembering again, we've got the NFP coming up, and that will affect all instruments that we're trading, particularly the US dollar, and therefore, if anything affects the dollar, it affects everything else too. So we're out of our gold and silver trades, looking for an opportunity to get back into both of these long. As I said in my previous video, I'm looking for support for gold down here at the 20-period moving average, maybe this top here at about 27.90, but more likely where we broke out of that blob, which I had drawn in there some time ago, back down to about 27.20, something like that, maybe slightly lower at 2,700. There's no reason to think that gold can't keep on going up to about $3,000 and maybe even further, but we've got a very, very neat trend line here, and it's been a little bit too long, a little bit too extended, and we're just generally a bit overbought. I'll just draw a trend line here just to illustrate that. And often when we get these very, very neat long-term trend lines, they eventually have to be rebroken and then re-challenged from the underside. Also notice we got an apex going up there, so we might just drop back into that trend line and sort of squeeze up in there and then drop down. And that would take us to about 2,900, 2,920 before we move down. That would also form something like a rising wedge. We remain long on Palladium, although we've dropped out of that little cup and handle, but not really. This is just a sort of a picture. I could redraw this any way I want. In fact, that looks a little bit better. And so we're down at the bottom of that potential cup and handle formation, just dribbling along the bottom. I kind of like Palladium. I think there's quite a lot of interest in it at the moment, particularly with the semi-comeback of ICE cars, internal combustion engines. Now to energies, we got out of our natural gas long trade at the top here, around about 3.35. We tried a small short, and I've just got out of that short now. Once again, I'm a little worried about the NFP result. I think it could be a strange result, being a little bit too steady and stable, and not too much worry about jobs. Remember, it is the Fed's #1 indicator right now. Inflation seems to be somewhat under control, but the jobs is something that they'll be watching very closely, because inflation seems somewhat under control, so it's now jobs that the Fed's looking at. And the moment they see those jobs numbers getting skewed to the downside, they'll start to think about cutting rates again. So if we see a poor jobs number today, we should see a drop in the dollar and perhaps a surge in everything else. But vice versa also applies, of course. If we see a very strong jobs number, it means that we may not get any rate cuts anytime soon, or at least based on that number, and we could see the dollar actually surge and everything else down. Dollar up, everything else down. Rule of thumb. Right, now that's natural gas. So I don't know what's going to happen with the dollar. We're out of the trade. We tried a small short at the top there. We got out of that this morning. Not really moving anywhere. I don't know how this is going to move, but nevertheless, we're looking to buy into dips. And ideally, we'd get a dip down to about $3. But my favorite place to buy natural gas, and I remain somewhat bullish on natural gas, is down at about $3 and $2.50. Those are my lines. You've seen them many times already by now. So the next support's here, down at about $3. That's also where the 100-period moving average is, roughly. And then the next support is down at about 275, 280, where the 200-period moving average is, and this longer-term trend line. And then, of course, we've got the $2.50, the dividing line between a strong natural gas price and a weaker natural gas price right down here at the sort of apex of this triangle. And that's also where the 61.8% Fibonacci retracement level is too. So let's wait and see on natural gas. We're out of the market for now, but we may be entering it later today or even on Monday, because remember, it is the weekend coming up, and weekend gap is bound to play a role, as it always does. And if the weather shifts and changes over the weekend, it'll change the picture completely. I'm not too sure what the recent forecasts are, but I'll be looking at that today. Right, on WTI oil, we've just taken profit, so we're now out of this trade. I'll just leave that red triangle in there to show you where we got in, but we're now out of this trade, and I can put a green triangle here where we exited that short trade. It looks like we're a little bit overextended, and once again, like I showed you on gold with that very neat rising trend line, too neat. Markets don't like things being too neat. This is also too neat. We've had too many down days, too few up days. We're at support, NFP today, weekend coming up, geopolitics uncertain over the weekend, as always. A lot can change over a weekend with the new admin in the US. So let's just wait and see. We'll try and get back into this trade on Monday. Hopefully we'll get a little bit of a bounce. Here's some moving averages up here. There's a resistance line up at about 72.50. We've got the 20 and the 200 close by at 74.30. And then of course we've got this resistance level up here around about $75. So for the first time in a very long while, we're out of both natural gas and WTI. We remain long on URA and UEC, looking very weak and pathetic, I know. But anyway, what can we do? We just have to wait for these to move along as they do, zigzagging their way up and down, but generally with an overall uptrend. I'll look at URA and UEC a little bit more closely in my next video. Let's go across to TLT and the US 10-year. We remain long on TLT. Really nothing has changed since the last video, as you can see. A little bit of a gap up as we saw the US 10-year drop down, causing TLT to gap up over the last couple of days. And we have broken down through this very, very important level here on the US 10-year, forming and completing, actually, this head and shoulders pattern. Technically, now that this head and shoulders is now confirmed through the breakout and close beneath this line here, we should move down to the next level. In fact, it should take us all the way down to about 4.1, but let's start with 4.3, where the 200 and the 100 period moving averages are, and this first Fibonacci retracement level, actually second, and it's not a Fibonacci, it's the 50% retracement level. That's all the way from the bottom up to the top. And so if we get back down there, 50%, that will be a good, solid, strong support. It's the 50% level is always a strong support, but also because the 100 and the 200 are right below there. And the 200 by the end of today or tomorrow or next week, the 100 period moving average will be on that line. And that will also actually form the completion of the head and shoulders pattern. We may not get down to 4.15. In fact, I'm sure we won't on first attempt. And we'll probably bounce back off 4.3-ish, back up possibly to the breakout level at about 4.5. So keep an eye out for that next week, as that market sort of needs to correct a little bit. In the meantime, I'll try and take some profit on TLT today. We're short from around about 90, and we're at about 89, 85 now. Let's see how this opens up. Looks like from looking across to the left at US 10-year that we'll probably move down a little bit, and we won't get the chance to get out at break even. Nevertheless, you never know. We'll see how the day goes. Then going across to coffee and cocoa and sugar and corn and all the other commodities, just to let you know, we remain long on sugar. We've got 3 tranches on sugar. The lower 2 tranches are now in profit, and this one's still out of the money. I'm looking to unhedge cocoa, and I put this up on X yesterday. As soon as we get down to this hedge level, this is where I hedged this trade right over there, won the breakout. We've got this pattern, pointed this out many, many times. And I noted that one should watch out for a break back inside this megaphone pattern. I hope you can still see it. It's these 2 expanding purple lines. We've now broken back inside the megaphone, which is the first step. We're very close to our hedge level, which is here at 10,260 odd. And I'll have to decide today whether to unhedge this trade and let the short side run, or if we might just get a bounce off that hedge level. I don't know. I'll probably hold on to this until next week and see what happens, particularly by the end of closing today or the end of trade today. Also on coffee, we've got this lovely pattern as well, very much like we've just seen on a couple of other things, particularly the dollar index. Look at this beautiful trend line, the breakout or breakdown through the bottom, the retest from underneath going all the way back up much, much higher, but still the same trend line. So it was a trend line, we broke down below it, we retested the underside. Even though we're so much higher, it's still technically a retest of the trend line. It's a very weird thing to get your head around. That's where we are now. We had a big rejection. Notice it's also a Fibonacci extension level, the 0.786 extension. And we've had a beautiful rejection off the underside of that trend line. We went short right at the top there, just above that trend line, allowing for a fake break through the top. And we've also got another short position from slightly lower down, from around about here. So that's where we are on coffee, hoping for that to move down. So we're short on coffee and cocoa. Cocoa remains hedged, as I said earlier, but we're long on everything else, except for orange juice. We're long on sugar, we're long on corn, although we've taken profit on that, waiting for this to dip back down there to get back into that trade. We're long on soya beans. This is a really good trade so far, moving up to the resistance level. I'm hoping for a breakthrough. We've got 3 tranches all taken right at the bottom. On each retest of the bottom, we took another tranche. Notice how that one tried to fake out the long hands. Nevertheless, we bought again on the break back above that line on that bullish reversal, and we're hoping for a break up through that level there. So we've got some really good positions on soya. Soya's been good to me over the years. It's a very tradable commodity, which I like very much. Now here's wheat. We're also long on wheat. Got 2 tranches, one there, one there. We're in profit on both of those. We're looking for a move up through this level. Wheat's been very tricky. It's a big product that comes out of Ukraine and Russia actually as well. And we've seen this languishing so low down despite all of the problems going on in Ukraine, Russia and the Black Sea and so on and so forth. And everyone was pretty bullish on wheat, including me, but we've just held on to this. We've been long since August, or basically end of July last year, holding on to these positions. So no wonder a lot of wheat traders become frustrated and bored with that trade, but we've just held on to it. We're also short on orange juice. This is now broken down through its ledge very pleasingly. We've got one tranche there, that's it. Taken at 5.11, we're now at 4.41. So really good profit on that actually so far. And I'm looking for a move down to this next level here at about 4.20. We'll probably take profit off there or hedge it or something like that. And looking for a move quite a lot lower down on orange juice. You can see once again, we've got this incredibly neat long trend line, which is now being broken as we speak. If I draw the longer term trend line up like that, you can see that not only have we broken down through that ledge, but also down through that trend line too. So it's looking pretty good for orange juice shorts, target 420, and then to either hedge or exit there, something like that. We're also long on cotton. This has been a weird one and frustrating. We had a false break below that support, if you remember going back to the soya chart, which I just showed you, a similar sort of thing. We've got 2 tranches on here, and I'm looking to take a 3rd tranche today, probably just after I make this video. We'll then have 3 tranches on cotton, all the way down there. These 2 are obviously out of the money so far. So I think that's it, folks. We've got the non-farm payrolls at 8:30 a.m. Eastern time today. It's a big number, primarily because it moves the US dollar, not because it has a direct effect on natural gas or soybeans or anything like that, or gold, but it affects the US dollar dramatically. And it's obviously something that the Fed's looking at very closely. When the NFP result comes out, the dollar will fluctuate wildly. It'll take half an hour or an hour to settle down, as I explained earlier in the video. And after that happens, we'll start to see the direction emerge in the market to close off this week. And of course, the way the week closes is very, very important in any market. So looking forward to the end of today, and we'll see what happens next week. I'm really hoping for a big rally on, I think, probably gold, Bitcoin, maybe stocks, even though we're short. We've got some long positions on Tesla, Apple, and Coinbase, so we'll see how that goes. So we're kind of hedged on stocks. It's been a little bit of a mixed and messy market this week, so hopefully that'll resolve by the end of the week. One more thing, folks, before we go, if you go to ArcisTrading.com, just to remind you, the link's below in the description. Click on there, put your name into this box that you can see on the screen right in front of you, and you'll get 30% off anything that you purchase on my site, including the G7 ebook, which is only $7 to start with, or the Swing Trading Blueprint course, or you can join my private trading group for 30% off your monthly subscriptions. Good luck for today, folks. It's going to be an interesting one. I'll see you in the next video.
Candles sway, get down with the market, trade all day. Wake up, coffee hot, laptops humming, Dow Jones jamming, Nasdaq's drumming. I'm riding that trend, watching it climb, snatching them pips in rhythm and rhyme. Mad cross, RSA tight, this funk don't stop, it's a trader's delight. Scalping those ticks, riding that wave, pip by pip, we're digging the grave. Funky pips, stacking high, moving with the charts, touch the sky.